Gold just delivered a violent bearish displacement, wiping out liquidity and breaking multiple internal structures. But the real question is simply, has smart money completed distribution, or is this just the first leg of a larger institutional move? Let's know in detail. In this breakdown, we'll analyze gold using tier price action, smart money concepts, and liquidity theory to understand where institutions are likely positioning next. Starting with the 1-hour time frame, gold remains inside a larger bullish expansion phase, but recent price action suggests a structural transition is underway. Notice how price formed clean higher lows followed by aggressive impulsive moves upward. This confirms previous bullish market structure. This bullish break of structure confirmed institutional continuation, signaling aggressive buy-side expansion. Institutions engineered liquidity above these highs. Retail breakout traders likely placed buy stops here. Price swept into premium supply and immediately rejected. This is a classic distribution signature. After taking external liquidity, price delivered a bearish change of character, signaling the first structural weakness. Instead of reclaiming highs, price formed a lower high confirming institutional unwillingness to continue buying. This breakdown invalidated prior bullish support and confirmed bearish structure shift on the hourly chart. The price is now attacking a weak low, where resting sell-side liquidity is concentrated. Institutions first engineered a buy-side sweep, distributed inventory into late buyers, then aggressively sold into trapped longs. Retail traders likely bought breakout continuation near 4,700, placing stops below consolidation low, exactly where price is heading. Notice the displacement candles, large bodies, minimal pullbacks, and strong inefficiency. This confirms institutional urgency. These inefficiencies suggest price may later retrace into premium before continuation. So in higher time frame, bias is currently bearish after liquidity sweep, see XAUUSD, lower high, and breakdown. The higher time frame gives us directional bias. Now we need execution precision. Now let's move to the 15-minute time frame to understand current market behavior and precise trade opportunities. On the 15-minute chart, price is an aggressive bearish continuation, respecting internal lower highs and lower lows. Every pullback has been sold into, creating repeated bearish breaks of structure. Notice how retracements are shallow and weak, suggesting strong order flow imbalance. Current price is consolidating just above weak lows, building liquidity. This tight range suggests either accumulation for reversal or temporary absorption before continuation lower. Bearish momentum has slowed, but structure has not shifted bullish yet. More liquidity remains below these lows, making them attractive institutional targets. If price retraces, institutions will likely rebalance inefficiencies into premium supply. Most probable path is retracement into supply, rejection, then continuation into weak lows. Only a strong reclaim above recent lower highs would invalidate immediate bearish continuation. So current battlefield is simple, liquidity below lows versus supply overhead. Let's now build exact institutional trade setups. Sell setup is based on retracement into premium supply followed by rejection and bearish confirmation. Ideal sell entry sits between 4,575 and 4,585, where price may rebalance inefficiency. Stop loss should be placed above 4,600, beyond structural invalidation and liquidity. First target is the weak low around 4,528, where sell side liquidity currently rests. Extended target sits at 4,505, targeting deeper liquidity below current demand. This setup offers roughly 1 to 3 risk-reward, aligned with institutional structure. Wait for sweep, rejection wick, and bearish candle confirmation before execution. Avoid selling impulsively at current lows. Institutions prefer selling at premium, not discount. Now let's discuss the alternative bullish scenario. Buy setup only activates if price sweeps weak lows and shows strong bullish reclaim. Ideal buy entry sits between 4,518 and 4,528 after liquidity sweep and confirmation. Stop loss should remain below 4,505, where bullish reversal thesis fails. First upside target is 4,580, filling nearby imbalance. Extended target sits at 4,625, near previous internal supply and structural resistance. This also provides close to 1 to 3 risk-reward if confirmation appears. Never blindly catch falling knives. Wait for sweep, reclaim, and bullish break of structure. Professional traders don't chase candles. They wait for liquidity delivery into planned zones. Always align lower timeframe execution with higher timeframe narrative. A great setup without risk management is just expensive entertainment. Gold remains structurally bearish for now, but key liquidity zones may create short-term reversals. Let price come to you. If you enjoyed this institutional gold breakdown, subscribe now and don't miss the next daily XAUUSD analysis.